more refined and more integrated over the years. But essentially, it's still the same flow. You come in with one token, you put it in a curve vault that will make some yield with that token, and when you want to leave, you're just withdrawing in the same token, but more of it. Pretty much the baseline flow, just so everybody's
of openness. And we were willing to onboard people who brought a lot of solid engineering to the table. Fortunately, what happened was a lot of the people who were creating strategies, you have to be a pretty good engineer to use the Yearn stack. And the strategies were not technologically sound. They were going to get hacked. So there was a pool of strategists that were
everything you said, right? If we look at the time arc, the longer time frame, there are many things that we understand. Welcome to Digital Duniya Podcast. Once again, origin of DeFi stories. We've got Yearn Finance, and we are so lucky to have Kwon from Yearn Finance joining us today. Welcome to the show, Kwon.
Hey, thank you for having me.
Welcome to Digital Duniya. It's my pleasure to receive Kwon today to go on Yearn's protocol, early history, and present days and future plan, I guess. So as it's becoming almost tradition in the show, I suggest we go, and I will screen share. We go from a very simple but very efficient way of seeing the protocol history, which is it's DeFiLlama kind of lifetime TVL chart. And we can see a bit the main events here, especially for a protocol like Yearn, because we do have the annotations on the graph. And so, yeah, I guess that kind of gives us a bit of the rough structure, right? The pre-Yearn token phase of Yearn, which existed, people tend to forget about it. The insanity that was the Yearn token farming phase and the following few months. And then, there was several issues within the ecosystem. Nothing that affected Yearn directly, if I recall correctly, apart from the very, very recent, just a few days ago hack. But again, that was not the core protocol. That was a very specific type of vault, the YEs. Don't worry, we won't go into the technical about that. There is very good reports that have been rated anyway, and I'm not deep enough to go into this, but just to give the overview. So,
go scroll over the top of the top, like November 2021. Put your mouse over there.
November 2021. Oh, here you mean. It's actually the top seems to be like around the 2nd December with about $7 billion. Yeah, you're right. It's worth noting because it's no small feat.
So that is exactly when I left my 10-year career in IT and went full-time in crypto at Yearn, right there.
I love it. You got the absolute top.
The absolute top. I mean, things were going really well back then. And yeah, we did kind of see some headwinds appearing because we knew Treasury rates were going to go up at some point. But I was working in the IT industry for one of the largest Cisco networks partners for 10 years, building networks for hospitals. And things were also changing in that industry. All of the electronic medical records projects, those were the biggest capital projects that hospitals ever do. And that suite of software was becoming a web app. They weren't hosting that in their data centers on premise anymore. So a lot of those hardware sales that I was making over 10 years, I knew were going to start drying up. So it was a good time to get into crypto full time, even if there was a lot of down only after that and some dark days over the years. I have no regrets about going full time in crypto.
Nice. And it's not the first story I hear about a telco to crypto jump, essentially. Myself, I worked slightly in the telco for a while. And I do think there is a lot of things you learn in that industry that helps you better understand decentralized network.
There is. And there was actually someone at Yearn, Salty Faku, if you remember him. He was one of the people who got me involved in Yearn originally. And he also came from the telecom industry.
Nice. So yeah, I guess to get off rolling, I kind of wanna maybe we start with just an overview of what Yearn does because I realize we haven't, in case some people are not familiar, and then I want to really go into those early days because it was such excitement. You know, it was also the first time. I'm gonna say it as a spectator a bit, and then you can go into it. But it was kind of the first time we had a genuine, massive excitement for a token kind of not one of the first time, but one of the first time, not the first time, sorry. But, you know, because we talked about curve launch as well and so on, but attached to a protocol, and people were really like, you know, memeing. I remember the Berkshire Hathaway meme,
Yeah.
you know, and things like that. And yeah, the price action got absolutely crazy. We'll show it after. But so I guess maybe first, I'm running ahead of the curve here. First, what does Yearn Finance do, and what's overall the vision there?
Yeah. So Yearn originally started back in 2020 because Andre wanted to make DeFi consumable. User interfaces and the interactions with DeFi were very risky, and they were confusing to new users because this was an entirely like new technology. They were not used to the interfaces that they would have to interact with. And he wanted to make people able to take advantage of the like borderless nature of crypto to get yields wherever they are in the world and have it be relatively safe. Like have there be Yearn guarding people from what is super risky, what is like moderately risky, and what is not so risky. He wanted that to be clear to users and make it consumable for them so they could get access to these yields wherever they are. And that was the first version of this product called the Yearn Finance, like even before there was YFI token.
Yeah, exciting time. So I'm just showing on screen the today's interface of Yearn, which is Yearn v3. But at a very, very high level, nothing has, I mean, it got very much refined, but it's still the kind of same idea. You get there, you will get a list of vault, which are essentially strategies. They got more refined and more integrated over the years. But essentially, it's still the same flow. You come in with one token, you put it in a curve vault that will make some yield with that token. And when you want to leave, you're just withdrawing in the same token, but more of it. Pretty much the baseline flow, just so everybody's aboard.
Yeah, there were two types of vaults back then. The one that you just described for curve, that's a liquidity position. We auto compound that so you don't have to do anything for it. It just continually earns yield every harvest. And then there was another version of yield that is, I mean, we now call it curation, right? We take one asset and we go and deposit it into multiple strategies inside of one vault, usually like supply side lending yields to Compound, Morpho, Aave, like every popular and like pretty safe lending market, Fluid too, of course. We just turned on a lot of those Fluid lender strategies because they have really good APYs. So if you go back to that DeFiLlama chart, there was a V1 Yearn, and that brought us to the point where the token was launching and people were farming the token. And then Yearn V2 launched. And the difference between V1 and V2 is in V2, you could have up to 20 strategies per vault. So that's when multi-strategy vaults started taking off. And Yearn was really the first like curator out there because people were giving us USDC and we had to go and figure out where to allocate that, like to what markets.
Yeah, the curator before the terms curator even existed. Yeah, I was just showing on screen too because I think it's also something I really appreciated about Yearn in the early days is the very proper communication you guys had on how were the funds actually deployed. So of course, again, it got better in V3. What you're seeing here is it was probably a bit less detail and a bit less clean in V1, but it was still there. I remember, maybe not in V1, but at least in V2, where you can see very precisely, okay, so this vault has 36 million USDC in there, and the allocation precisely is like this with some chart, some info of the contract is linked to the contract, and that is new to V3, I think, an overall risk scoring of the vault to kind of guide the users further.
We had risk even back in 2020, but it was on a separate site called Yearn Watch. I don't know if you remember that. It was David Hasselhoff, David Hasselhoff themed vault risk site. It was pretty funny.
Does it still exist? Let's see.
No, they took it down. It hasn't been around for a while. Yearn.watch.
I know it's some seafood thing. I don't know. Oh, yeah, no.
Yeah.
Oh,
So,
yes.
so seafood was also another version of getting more detail on Yearn vaults and when they like last harvested, how much like profit was sitting there waiting to be harvested. And there's a bunch of data on that site, which is also not maintained anymore. That's what
Yeah, it's all
happens.
right.
Like we had 125 contributors at the top in 2021. And, you know, when you dial back from that amount of people and that amount of like application sprawl, there were some loose ends out there, stuff that was like no longer maintained. And we needed to do a better job of like buttoning that up and organizing things and deprecating old software. We know that now.
Yes, we're gonna touch on the DAO. I think maybe you should you want to resume control of the show, Sarah. I will let you ask the question. No?
I'm also a little bit light on Yearn. I started using Yearn Finance in early to 2021, and especially I only use one vault. Rocket Pool ETH.
Yeah.
There was some juicy yield going on with Rocket Pool ETH. So I participated in that, and that was my first-hand experience with Yearn. And ever since, I've been following. I think Yearn, Breeze, I'm going to leave technical questions to you. You're probably better in charge with that. But I'm going to ask more story or background, right? So, Con, what was that one thing that you think that got so much interest in Yearn in first place?
So this is going to be a little surprising because it has nothing to do with the technology that we were doing or like the Yearn North Star of making DeFi consumable. This was the first case of people being aligned around a token. So last year, I spent a long time doing some fundraising for a project that was for a chain. It's now called Katana chain, but back then it was called the Sync. And there was a lot of integrations of Yearn vaults on it. So I was like leading the charge for fundraising for it and talking to like 50 different VCs in crypto. Almost every one of them, like the first thing they said was, I farmed YFI token. Like I was involved in that. I had a lot of YFI. It was where I made my first start in crypto.
It was a bonding moment.
it really was. And even on all these sites of like VCs and liquid funds and stuff, they say that they were involved in Yearn Finance back then. And you could see today how, you know, vault protocols now, or like competing vault protocols of Yearn, or like whatever else is out there getting popular in DeFi today. People are still massively aligned around their bags. And like token alignment, like cap table alignment, it matters. It matters almost more than anything else.
For sure contributed to this early community sentiment. I just want to ask a follow-up on this because I remember that it's a lot of trivia there. The term pool 2.
Yeah.
You guys really literally created that, right? So maybe do you want to take us, because I'm not sure a lot of people remember, over the whole like YFI token farming experience, you know, the launch, how you farmed it, the pool 1, the pool 2, and then we can even talk maybe about the forks, because I remember plenty of forks. I was a new one every week, pretty much.
There are still some like YFI like forks still listed on CoinGecko that I get alerts about sometimes. But basically, Pool 2, Uniswap came out back then. Uniswap was a great, easy way to provide liquidity to a market. Before that, people had to like have trading bots and use centralized exchange order books and stuff like that. Pool 2 was where you could provide liquidity. You could provide the governance token and ETH, both sides of the trade, into one pool, and you got outweighed APYs, outweighed yields, like hundreds of percent APY for a period of time until people started dumping the governance token over and over and over, like endlessly. So when people talk about food coins, there were a bunch of other food coins like shrimp and yam back then, and people were farming this valueless governance token called shrimp, getting like 5,000% APY. The token price was going up because people were buying it at the time. it only lasted like a few weeks, some of these pool twos. And if you were farming them aggressively, like getting in and out, I suppose you could make some amount of money, but most participants of pool two did not make money.
Yes.
Breeze,
For Yearn, it was a bit different though.
Yearn, it was different, did you say?
So the Yearn pool two, you could provide liquidity to the YFI ETH pool, and you got more YFI token.
As I'm showing in the chart, the early days of the token were quite insane.
Yeah.
So if I remember correctly, it was a 2 weeks farming period, right? So it started roughly end of July. So you have to imagine until mid-August. And essentially the token went on a golden run for almost a year following that farming, quasi non-stop, as you can see in the chart. And you have to picture from the early farming days are about 2K per token, or even before it was a bit less, to a peak of around $80K per token. So quite a crazy multiplier for those who farmed and just held, essentially.
That TVL that we were farming, and a lot of the valueless governance tokens that eventually became yield for people who were farming YFI, they were printing more than ever back then, especially when Phantom Chain came out, Andre's Phantom Chain. That was like the peak of the peak. We were farming $1 billion of TVL that came into our vaults within a week. It was insane growth. There were tons of governance tokens out there that we were just dumping like constantly to get yield for people.
I remember people were scared, they were finding a good farm, and then it was growing, and then past a certain time, they was like, oh no, Yearn is gonna integrate and they're gonna dump on us.
Yeah. That was an exciting time. It really was. I can get into some of the like actual structure of Yearn back then. It was supposed to be a very open DAO, and it was, and it onboarded a lot of people. Originally, strategists were part of that category of openness, and we were willing to onboard people who brought a lot of like solid engineering to the table. Fortunately, what happened was a lot of the people who were creating strategies, you have to be a pretty good engineer to use the Yearn stack, and the strategies were not technologically sound. Like they were going to get hacked. So there was a pool of strategists. There were like maybe 15 people who were getting a good chunk of those profits paid out to them because they were owning and operating those strategies, and thus the risk of operating those strategies too. And at that time, people were moving really fast to expand to these new like farming pool twos and stuff like that because they were relatively safe. I mean, they're all the same. They're just a Uniswap pool or like a Curve pool, balancer pool. They were not asking us to like integrate more complicated like lending strategies that would require us to build adapters and have more audits at that time.
Yeah, just to double down on this, because we did cover a bit of sushi in our previous shows. So you have to keep in mind that a lot of these were essentially sushi swap master chef, it was called,
Yes,
farming contract.
exactly.
So literally you were just staking an LP token and getting a constant flux of reward in return. Very standard code, replicated quasi as such by every project, just changing the token address pretty much.
Yeah, so back then it was really easy for us to stand up strategies because we knew that they would be safe. But today, farming different lending products quickly, new products that are on the market, is extremely risky. There's a lot going on in lending projects. I mean, they need to be audited a lot. They need, more importantly, like time in the market. And that's why like I get hit up to make Yearn strategies every single day for new projects. And I have to say no to a lot of them, unfortunately, because they just haven't been in the market long enough and they don't meet our like risk prerequisites. 4626 that came to the market, that was the vault tokenization standard that the person who built Yearn Vaults v2 actually helped develop the 4626 standard. Basically, that allows us to not have these plugins between Yearn Vaults and the things that we're farming. There's a a standardized adapter so we can get to market faster. It's more secure because we don't have to do audits and stuff like that. It's just less expensive for the DAO, less overhead for us overall too. So those are the advancements that started to come in 2021 that kind of brought us to the next level before we faced all of these headwinds all of a sudden.
That's really interesting. I think, like, you know, with ICOs, I try and connect in my head. 2017 was first time the coordination game started experimenting with raising capital. Raising capital, i.e., being the most important tool to play the coordination game. And even today, the traditional finance, that's broken not because of anything else. It was made by people for a different era, and they break it down or make it slow for protecting and risk management. But with the speed of internet, I think the new iteration, which happened with farming and now ICO back, I think just on a much more greater scale, I think we are going into probably round 3, where the coordination game and raising capital is going to get a lot more faster and efficient. But I'm not completely saying that, like, you know, it's going to be bed of roses. There will be different set of challenges.
I agree with you. Yeah, there's definitely a different set of challenges these days.
So, Breeze, back to you for the next one.
Yeah, I mean, there's plenty of directions we could go. We haven't touched so much, I guess, on, I mean, you evoked it a bit in terms of overgrowth and the learnings there. But, you know, what was exciting for me in Yearn's story is it was also, as you said, like a protocol where, because of the distribution method, a lot of people gained ownership of it. So it was a bit of like the people's protocol, I want to say, in that sense, because, you know, you have to keep in mind that it was next to protocols where private sales, VCs, ICO, whatever was the distribution method, but it clearly wasn't, you know, just a 2-week farming and distribution to the users. And so following up on that, the DAO was kind of bustling in the early days all around, sometimes erratically. But I don't know. You want to take us a bit through some highlight moments of the DAOs? You know, maybe some, I don't know, proposals that were kind of landmarks or decisions, evolution regarding the governance also, because I remember the veYFI and so on.
So that's another like really popular topic that comes up at conferences. People come up to me and they're like, "You work for Yearn? I farmed YFI token," and then like some of them are even like, "Look at this post that I made on the YFI forum like 5 years ago," and they were participating in YFI governance back then. It's crazy to see that. And today, you know, they're working at some other big DeFi project. I would say forming the Yearn culture, when I think Tracheopteryx was the person who wrote the Blue Pill. The Blue Pill is this like 100-page PDF that basically outlines what Yearn is, like how it formed, who formed it, and what the like mantras are, and the principles that really formed Yearn, how open it is, and how people anywhere can participate. I think some of the messages within the Blue Pill are definitely from a point in time that like is less relevant to today.
Wow, it's even available in Hindi.
Yes, yes. Some of the Blue Pill is definitely relevant to today, but also some of it is not. Some of it we know like did not work out for various reasons, and you know we need to have more controls over like investments that the DAO is making, hires that the DAO is making, focuses of, you know, what new structured products we want to build. But a lot of this is still very relevant today. And some of these people are actually still working at Yearn. Not Andre, though.
I see it like a time capsule into, you know, the DeFi mindset of then a bit.
Yeah, it really is. like, I think the characters on here were Tracheopteryx. He's doing governance at Eigenlayer now. The dude's on, he's still around. Like, Banteg is still around. Clem, I don't know what Clem is doing these days. But yeah, these people, the revolutionaries.
And again, to connect it with the greater arc coordination game, also the outcome is property rights, right? So people get excited to be able to participate and have a say in doing something meaningful, right? And as we rightly, as they say, right, we are normally, in general speaking, short-term super bullish and long-term very vague and less optimistic. Whereas the reality is that long-term, I feel that all these experiments and where we are going is going to be mind-bending in next 5 to 10 years. And when we look back at the same stories, we are going to connect the dots saying that this is what happened and this is why it happened.
Yeah, you're exactly right. And, you know, it's tough for Yearn, and it's tough for some other, like, first movers in the industry, especially in crypto because it's so competitive. How do you maintain your moat? And that's what we've always been focused on that, but we have these like high prerequisites and these, you know, rules and standards that we're not willing to really move away from. So there have ended up being a lot of headwinds for Yearn. I mean, even the fact that a lot of protocols that have the same kind of chart that looks like the Yearn TVL chart or the YFI token price chart, their founders, the ones who have recovered well in the past couple of years, their founders have stuck around. Their founders have like been present. And it was not the case with Yearn. We've always had to like reinvent ourselves. Banteg is around, sure. He didn't start Yearn, but he was definitely like one of the front characters. We've had to constantly reinvent ourselves and bring in new talent. And we have not hit our stride again in the way that we once did.
I mean, with Katana, we can touch on it later, but it feels like it's definitely been a kind of a Yearn rebirth over there.
Definitely. Katana was it was a brilliant white paper, and the execution by the Polygon team has been awesome. Like Mark Boyran and David Silverman and Alex Chow and Omnifiant and Matthew over there, they've been a real pleasure to work with. And everything that we've like agreed upon long ago to execute has like come to market, and it's been great.
Yeah, maybe just to give listeners some perspective on this. So right now, Yearn per DeFiLlama has about 590 million of TVL and 326 of which on Katana, 243 on mainnet. And then you have a few L2s like Base and Arbitrum and OP that have much smaller TVLs below 10 million. But yeah, so that's roughly the distribution. One more question I wanted to ask, because I think it's important to the story, and you kind of touched on it, is the culture and the characters, you know?
Yeah.
So this culture was quite specific to, it's like very friendly to Anon, for instance, with a lot of core contributors being Anon. You kind of yourself a bit of an exception there. I was almost surprised how you got your camera on when I saw you jumping in, because we never were in a call before, so I wasn't sure what to expect. But yeah, maybe you mentioned Benteg or any others, but like, you want to touch on some of those like main characters that were kind of emblematic of the culture of Yearn itself?
Yeah, and some of them are still here today, like being anonymous. Definitely Banteg and Dudeson, Wavy, Gigi back in the day. You know, there were a lot of us, and the Ghost, he is still around, not really part of Yearn, but he's around the community. All these people are still working in crypto, I'm pretty sure.
Yeah, and some of them became quite household names, I want to say, you know, OXGG. I think I saw him, I was doing a scouting on on Ethos of the biggest, the most like with the biggest Ethos score angel investors, and he was in the top 10 or things like that. So
Really,
definitely
that's
have
funny.
people that have like landmark all across the space that they
Yeah.
seem from Yearn early days.
Today we're only 16 full-time people.
Wow,
So
that's really tight ship. 16.
yeah, we've reduced our operating expenses by in 2021, I think the monthly operating expense was like $3 million. And today we're at 264K. I mean, we're operating profitably. You know, it took a lot of time to get down to reduce like expenses, but it was really, we had to do it. We had to.
That's efficiency. I feel like there's always one arc with me and Brice is every time we speak, we talk about something that is specific, and also at the same time we want to try it and connect it to the greater arc. And I feel that it's also kudos to you guys as Yearn, right, to be able to weather all kind of storms over probably 6-7 years.
Yeah.
That
5 years.
itself is testament to the power of efficiency and realignment in making sure what's the best way moving forward.
Yeah, we were lucky to make the $100 million of profit in 2021, and that carried us a long way. I think by the time after like UST collapsed, I think we probably had like $10 million in the Treasury. Now it's like 19 million. All these years later, we have been able to grow it and not draw down on it. So it's important.
That's I think that calls for an applaud. I really think it's not an easy fit. It is very exciting to see a lot of revenue and big numbers coming in. But real challenge is when things go pear-shaped, right? To be able to come back and take that knockdown and still go on and build, right? So really appreciate all the hard work that you guys have been doing.
It's really hard to be very profitable today. If you look at the curation landscape, we are doing curation on Morpho right now. A lot of that's on Katana. We have $158 million in curation on Morpho. It does not make a lot of money. Like, we don't have big fees on there. Morpho themselves aren't taking a fee. Like Steakhouse and Gauntlet, their fees are really small. The entire curation of Morpho of like $5+ billion only makes like 400K a week. So the overall profit margins in DeFi have really been crunched a lot.
And even
One
more
last
since
thing.
October 10. Oh, sorry. Go for it.
No, that's a good point. Bring it up. Just one thing I wanted to say is I see that and I understand. I've been in TradFi for a number of years, right? So I understand that. But I like to see and believe in a point that the greater arc in next 5 to 10 years is going to be so widely big that even that small percentage is actually going to make it worthwhile. The real question is, who can pull through that time?
I hope you're right. I really do.
Yeah, it's hard to see that, but I believe the projects who are going to survive this next 3 to 5 years, they are going to be seeing huge fees. The percentage, the number is going to be small, but the share volume is going to be quite big.
I hope you're right. The reason I say that is because like so many people are like super, super excited about institutions building in crypto, but are they really building in DeFi? Well, it's really not in their best interest to have any areas of like capital leakage. Anytime they connect to an open borderless platform, they risk losing fees. And for this reason, like, I'm not that bullish about their interop with traditional DeFi like we are today. I talk to a lot of institutions about using Yearn Vaults v3 as a like capital allocation platform, just like other DeFi projects have built on Yearn v3 today. But it is also it's a permissionless stack, and it's complicated to use if you're not like a great Solidity engineer, and not all these institutions have big teams of experienced people, or if they do, they tend to come and go. So they are aware of their own like engineering talent turnover that they would have to worry about in the future. And for these reasons, they're tending to use protocols that operate more like a multi-sig, where they have full control over what to show users at all times. And it really is not that compatible with the Yearn values.
And that's going to be the friction. It's an ongoing thing, but eventually, I'd like to believe that the system will outdate their existence in a point where the thought process, the principles, or the mindset of digital finance, when they don't have a choice to go to on-chain finance, and the ethos would be very similar. So the real question is, who can stick in there to pull off that to the other side? That's my thought. I could be wrong, but that's how I see it.
Survive. Essentially, it's interesting.
We can survive forever. I've been doing this for over 4 years now, and I'm personally getting to the point where like surviving is great, but we need to really grow. And without growth, surviving is really satisfying, ourselves.
That's true.
I hear you. No, Breeze, you carry on with your interesting question.
Thank you. I just had one more, and maybe just one quick observation on your institutional discussion is, I feel like it's always going through the same circle as it was going with the internet, for instance, where I'm not very privy to finance and big corporation, but so it's more reading from the outside. But I feel like institutions will always seek to maximize control because they have to ensure compliance, and the best way to ensure compliance is to have full control. So they kind of default to like, oh, we like this cute new tech that you're doing. We're gonna copy it and make our own version of it. You remember the intranet, the corporate intranet. It was actually a big thing. People were saying, "Oh, the internet are gonna flip the internet almost." That was not a crazy thought back then. And of course, nobody knows what an intranet is because it completely flopped. And all the corporations, even them, are using internet in some form with their private clouds and whatsoever, but still on the internet. And I feel like we went through a bit of the same cycle with the blockchains, where you had all those corpo L1s and even L2s. Well, not so much L2, more L1. And maybe we've been past this phase, and there are projects like what they are doing with Zcash, essentially allowing an entity to deploy its own L2s under its own term, but that could tap into the liquidity of the L1. So some form of modern day compromise that we have intranet, crypto version essentially. So yeah, we'll see where it goes, but I'm not too excited about this side of the industry. I wanted to point you again on the governance question at the because we touched quite a bit on similar topics in previous shows. I think could be interesting, especially the veYFI, and then now it's Staked YFI. So there's been experimentation and evolutions there, and I think they're also quite kind of carrying also the story of the DeFi times, and not just the story of Yearn, if you follow me.
Yeah. So originally, YFI token was just like a valueless governance token, and you couldn't really do anything with it aside from voting. And we came out with this thing called veYFI, where you could lock your YFI token, and we would take some of the profits that came through Yearn, and we would buy YFI token off the market and distribute it to the people who had locked YFI. The locked YFI holders, they had veYFI, and they also were able to participate in governance. So the next evolution of this that we just passed in September, and we're right now auditing the new contracts for, are for Staked YFI. The changes for this: before you had to lock for up to 4 years. Now you don't have to do that. The cooldown time is like a month for this. So you lock your YFI, you get Staked YFI, and then you actually get a distribution of the profits that come through. YFI. It's not going to come through as like the YFI token itself. So this is the new meta. This is what everybody is going for. You have to have a product that generates profits. You have to have a real product. And, that's what we're doing. We're starting with the basics, and we're going to make sure that we're all, for every product that we make, have fees on, like have profits. If it doesn't get picked up by the market, then it wasn't a good product. Try something else.
Got a spicy follow-up, if I may.
Yeah, go for it.
Yeah, please go.
Why not a 4626 Wi-Fi? Because that would open up some interesting things like integration on Pendle and things like that, yield speculation, and just greater composability than a kind of semi-locked is how I call them. Because you're not really locked, or you're locked for a short duration, but you're not liquid, and you don't have like an ERC-20 token that you can take around. And I mean, you do have the Staked YFI, but because of those this withdrawal period, it's not very like Pendle compatible, for instance.
Yeah, that's a good question. Why don't we want to have staked YFI as collateral? I guess you'd need to make sure that it was liquid enough to handle like liquidations and stuff. That would be another asset that we would have to worry about maintaining liquidity for at all times. I think, governance tokens they're kind of like risky collateral. Like they don't always end up working out as intended. Like sure, there could be some bumps in token price, but beyond that, maybe it's not so great long term. It just wasn't something we were, had at the front of our minds. Like we are really focused on just building up profitable products so we can actually have the yield that's going through YFI like be meaningful to people and scale into the future. It's not a bad point though.
No, that makes sense. The focus is on the product, if I get you right. And I mean, that makes a lot of sense. This is more like to kind of eliminate technical debt that was coming with the veYFI token and like reach an alignment of the participants by the adoption of a quasi-standard at this point, because you're right, this model is becoming increasingly common.
But Brees, these contracts are like in development right now, so there's still time. I'll bring it up.
Before we head into our final segment, I think Brees, it's appropriate we cover in what near future holds for Yearn, because that's going to be interesting. But before we go there, just quick question to both of you. Token buybacks and revenue share model. Which works better? Do you guys have any thoughts on that?
It depends. Definitely depends. Like I really don't think maybe the math says one model is better than the other, but there are so many external forces that affect this, like market makers, liquid funds who are buying your token, whoever you're aligned with in terms of your investors who want to keep buying your token. I don't think there's any like right or wrong answer here right now, regardless of what anybody says.
Fair enough.
Yeah, for me, I would say I do think there is a clear loser in all of that, and that's a buyback and burn. Because, I find it extremely wasteful of an allocation of resource. A buyback and distribute, for instance, makes more sense to me to kind of, consolidate into your token, generate some volume here, and then use it as an incentive mechanism, essentially, within your protocol, your ecosystem. That makes sense. Burning tokens, I'm still quite the burn skeptic, essentially. Is burn really having an impact beyond the psychological impact, I want to say? So yeah, that would be kind of my view.
No, I agree. Go ahead.
One of Yearn's biggest headwinds right now is not having a token print. We don't have incentives that we can give out to people. We don't have incentives that we can give out to partners to get them to work with us, because a lot of these integrations we're doing right now, we're always asked, like, we're going to be, providing these incentives for your Yearn product on our chain. Can you match? And they make it a prerequisite to working with them. And like, we can't do that because we're not printing a token. We have a finite amount of YFI tokens. And that has definitely been like one of our biggest headwinds to getting like new TVL in the door.
I agree. Like, many things are happening at the same time. Token liquidity, you can't print inflation, that plays a part. But somewhere intuitively, as of today, it might change in future. But as of today, I think rewards flowing back to the users create a really strong loop in one way or the other. And based on what you just mentioned, sharing fees with the token holders, I think it's a good direction to make headways into.
And for our partner integrations, we're doing fee sharing with them also. So they'll get a share of the profits for building on top of Yearn vaults, just like happened many years ago.
So as we head to the final round, top 3 things that you're looking forward to with Yearn Finance in next 6, 12, 24 months?
Well, we already have a lot of partners building on top of Yearn vaults, and especially the Katana integration. I'm really excited to see that grow. I'm excited to see other chains adopt our Stake the Bridge, like the native yield bridge that we built, to like rehypothecate their chains. It's a good play. Like that is a way to get yield from mainnet and drag it into your layer 2 to use as incentives that don't expire. Like as long as you have bridge TVL and you're getting that yield through our supply side lending strategies, those never get extinguished and you're not printing a token. So that's a strong play. We're definitely going to be integrating that more in the future. We're also going to be experimenting more with new structured products that are not, always going to be built on Yearn v3. We're always thinking about what else we can build out there. And one of those products is actually a small lending protocol that we want to build as a SubDAO that's similar to how we work with Convex on resupply. So we want to do more of these SubDAOs. That particular lending product is being built by Johnny Online, who's a Yearn developer. He actually built it in like 14 or 15 different live coding sessions on Leviathan. So you can go on there and you can like see him build it in real time. It's kind of like a modified, it follows the same interest rate model that Liquidity v2 does. So people can be, redeemed at certain points, even if they don't want to be redeemed. But the value prop for this is the lender can always redeem for the borrower's collateral at all times. So the borrower necessarily isn't getting liquidated in this case. They're being like de-risked because they're going to have a different token. You can learn more about that like coming up in the future. It's going to be called Flex. And aside from that, we're going to be experimenting with some more stables products, like some more structured stables products. And of course, like my job is always to get TVL in the door and to get people to build on top of Yearn v3. So recently, in the past few months, we've had True Markets build a yield-bearing vault that will give people like using their product to earn yield while they're waiting for their markets to resolve. And we did another one with Robin Markets, which is a yield layer on top of Polymarket. Cap built their product on top of Yearn v3 also. Octant built their product on top of Yearn v3. And then some others, Term Finance, Superform, Swell, like Staked Curve USD is built on top of Yearn v3. We have a lot of integrations out there that aren't necessarily counted in the Yearn TVL, but people are using the technology stack. It's typically teams that have like a really solid engineering team and in-house, of course. And like that's always going to be my number one focus, getting partners to build on top of this stuff. And then, if we have a good structured product that people are really jumping into, getting that integrated into DeFi, getting that on like Pendle and stuff, and getting that to be, consumed on different lending markets as collateral and stuff like that. That'll come once those products start hitting the market.
Yeah, I really like that dimension of Yearn as well, which is, essentially kind of the go-to reference vault builder. And so protocols that need some type of vault feature. And usually it's not, it's not protocol outsourcing their core work. So it's not another vault protocol building a Yearn vault. It's really like, I think the true market example is ideal here because it really explicit it all, it's a prediction market and they have stablecoin because people bet on prediction market with stablecoin, and they figure, okay, we want people to earn yield when they have an ongoing bet. How do we do that? Well, we need a yield-bearing stablecoin, and so we knock Yearn's door because they build vault. They know that very well, and we see with them how we can do, and boom, you have the true dollar or whatever they call it, TYD.
Yeah, exactly.
Yeah, and so that's really cool. On that front, it's good to know that you're the one handling it. I will be ringing your door shortly for a project I'm working on.
Yeah, no problem. I'm happy to talk to anybody about anything, even if it's an integration like many months down the road. Talking about it now and like what technology stack they're going to use is really important. The shift in value for Yearn v3 compared to other vaults, of course, is that everything that we do is programmatic. So for instance, the way that we price vault shares cannot be tampered with. We have price per share that goes up every time we harvest profits. And if it ever went down, everybody would know that there's a big issue. The other vault stacks on the market right now that function as like a multi-sig, they can put price per share to be whatever they want. So if somebody has some bad debt or if there's like a loss that's taken, they don't necessarily have to show that to their users. And that's like one of the most important things to us is to not be banking but worse. We need to, if we're going to be Anon and like permissionless, you have to have that certain set of controls that like does not exist, so people know that what they're entering cannot be tampered with.
Yeah, you do not need to pitch me on the how to say this, like the philosophical advantages of immutable code. Essentially, that's kind of how I would frame it. It's more than philosophical. It's like untemperable values in a way. Where like it's not, oh, we promise we won't rug you. It's like literally by code we can't rug you. And this has a lot of power, I think. Ultimately, for me, that's the end game of DeFi, And I've always kind of had the vision that everything else is a bit of us toying around, fooling around, a kind of adolescent phase of multi-sig and degeneracy. But the adulthood and the maturity will be made of immutable code.
Yeah, that's Vitalik's vision of low-risk DeFi. Even if there's no such thing as low-risk DeFi today, and we need another like 10 years in the market to prove that these models are bulletproof, we will get to that point, and it will be built on verifiable DeFi. The quality of just AI audits coming out right now, it just blows my mind.
Everything you said, right? If we look at the time arc, the longer time frame, there are many things that we understand, there are many things we see currently, and there are many things that we are not aware, right? They all are going to shape the future. I think all three of us aspire to see and participate in. So I think it was a new experience for us to have you on. And I am so happy that we have been able to record this. Brice and I would like to once again thank you for joining in. And I think more of these conversations are, I think, really powerful because there's always new wave of people coming in. For them, it is really important to get some context from whether it was 2020, 2017. So it's our small effort to make sure that we are presenting them the story that they can connect the dots with.
Yeah, we're not that old, but we have to accept our role as a law keeper, We live through those times. We remember the great wars, and we need to tell the children about it. The DeFi children, of course. Yeah.
You guys are right. And it might, maybe we don't even need 10 years before verifiable DeFi is really huge. maybe it'd only take 5 years, but I stayed at my first career out of like university. I was there for over 10 years. So I've been at Yearn for a little over 4 years now. I've seen a lot change in crypto, and like even in the IT industry in 10 years, a lot did change. But here, like, no question, we're accelerating like a lot faster than other industries.
On that beautiful note, any last comment, Con, Breeze, before we wrap up the show?
With yours, if you want it, Con.
No, I don't have anything else to cover. It's great that you're doing this this jog back into time. Who do you have on your list to do next?
So we're gonna go with I think Fluid is probably the next, right? But we also want to do a Maker
InstaDAO.
episode.
Make it out.
Yes, and for those two, I also brought about some guests because same situation as Yearn. I followed, but maybe even less closer than Yearn actually, especially the early days. So yeah, we have a great guest for both as well. I'm pretty excited for this one. You probably know Paper Imperium for Maker. I
Yeah,
figured,
of course.
who better than Paper Imperium to go over the law of Maker? He's literally the Maker official law master. I mean, not so official now that he's no longer delegate, but still official to us, like the best law master for Maker for sure.
So I think Fluid did a much better job than most at vertically integrating. They definitely saw that they needed to do that years ago. And look, they made it happen and they're growing. Paper Imperium, I have a funny story about him. The first time I ever interacted with him, I had this proposal at Maker, MIP92, on board $100 million of their PSM USDC into Yearn vaults. And I was talking to like all the delegates and trying to get them to like be familiar with it. I had to go around and like pitch all of them. And that's when I got to know Paper, and he warned me about like just how challenging it would be to get something passed in Maker. And MIP92 did pass, but it was part of the MIPs that got like cut off when they changed to when they deployed Endgame, or like maybe that never happened, but Rune killed like 25 proposals in one day while everyone was traveling to ETH Denver. So there's really nothing that I could do about it. It was very interesting timing. And, MIP92 never worked out, but I got to make a friend in Paper Imperium.
That's nice. That's perfect intro for the next show because, yeah, I think we're going to be talking a lot about governance drama in that one.
On that beautiful note, thank you guys for tuning in to Digital Duniya. I hope you guys listening out there, watching us, would have same amount of fun, if not more, as much as we had recording this episode. Once again, thank you for joining in, and I'll see you guys around in the next round.
Yeah, thanks for having me.
Thanks, Con. Have a good one, and you too.